What's up, you guys? Today's video is going to be very, very special. We have no notes, we have no script, we got nothing. We're not even have an introduction for this video. But I wanted to talk about some things that I think are seriously troubling with this stock market, with YouTube, with the community, with certain stocks, and more or less just share with you my thoughts, because I've had so many jumbled thoughts about all this stuff over the past number of months and years. Honestly, it's just been kind of all these things piecing together, and today I just want to come out and spill it all out like a can of worms, like a can of beans. Just spill it all out there. So as always, take this as just an opinion. You can always feel free to agree or disagree, but let's start off with my thoughts on the overall market, because the stock market, if you looked at, for example, just the Dow or the S&P, we're already back up at all-time highs, and to me, we are in a bit of a wonky market. I mean, the reality is with the stock market, in my humble opinion, it's always a little bit wonky. You could always make an argument at any point, even when I started very closely watching this back when I started working at the firm here. Even then, people were saying the markets were wonky and they were too high and this or that, and you can always make that argument. But especially right now, I would not consider this a normal stock market. With all of the politics and all of the stimulus and all of this coronavirus stuff we got going on, it's just not, it's just crazier than usual. And especially for new investors, I don't want people to get this expectation that this is what the stock market's all about. And in particular, where I see danger zones, where I see people that could very likely be getting themselves into trouble, is kind of underestimating how things could go from a negative sense, how things could turn poor, let's call it, how things could go bad. Because overall, like, let's just look at the S&P or the Dow, or whatever I pop up on the screen. Aside from that brief little sell-off, and that's really what it was. I mean, it's funny that technically our COVID crash back in March, when the market sold off, when we went into the lockdowns and everything got very, very serious, that, of course, because the markets dropped 20% or 40%, whatever it was, that technically ended our bull run. But to me, when I look at a chart like this, that is nothing more than just a glorified correction. It was a big, big, big dip, bigger than usual. You know, dips are usually 5%, 10%, a little this or that. This was like a 40% dip because it bounced back faster than I think we've ever seen in history. In fact, I know statistically this was the fastest recovery that we've ever seen. So I got a comment on the channel the other day, which actually was an inspiration for this video almost. Someone said, like, you can now say you've lived through 2 crashes. And I wouldn't even say that's accurate. I personally would not even consider that a crash like we've seen, for example, with the tech bubble. Like, I mean, dating back to, let's say, the 1990s and the early 2000s, or the financial crisis. I mean, take a look at these, just the movement, the direction of the market relative to what we just saw here in COVID. Obviously, they both dropped, but it is a very different style of drop. It wasn't like a prolonged market crash. It was like a, let's dip down and let's bounce back up. And obviously, I'm just kind of like looking at it very top level stuff here. But the point that I would like to get across here is that I wouldn't consider myself having lived through a big market crash yet. I would very much consider that just a big correction. And where that leads to me with danger is that if investors are thinking that what we just went through, if you're just new to the market and that was your first real crash, if you're thinking that that's what an actual crash is like, I think you need to understand that things can get far worse than that. And again, just to look at our 2 examples here, these are multiple year periods where the stock market is trending downwards. And in general, companies are losing value and there's so much negative sentiment in the stock market. And of course, we had that all in a very compressed section here. But point being is that we could have a lot more in store. And that's what I just want people to prepare for. I'm not the type of person to be doom and gloom. In fact, I'm the person that just says we take everything as we go, and over time the markets are going to go up, so let's just keep investing. But this actually leads into some of my second thoughts for today's video, which lead into like companies like Tesla, because I get questions all the time, like Tesla stock and NIO stock, and even these Chinese electric vehicle stocks. I'm getting them all the time. And I think that when we see the types of coverage that we're getting online now, when we start seeing the masses start flowing into these types of companies, we've seen it in my lifetime, and that's a short lifetime of 25 years, but I've already seen it and experienced it firsthand with a couple cases. With Bitcoin, obviously, the Bitcoin, and I know you may say, oh, Bitcoin's doing well now, but a lot of people got devastated through Bitcoin from falling victim to this mistake. They also fell victim to the marijuana stocks, and I'll touch on that, on my reasoning behind this in just a second. Now I'm thinking that we're in a very similar bubble with, let's say, electric vehicles and even just hype stocks in general. There will always be excitement for hype stocks, but in particular, I think we may be headed for something way worse. And where was I getting at? Tesla. So let's move on to stocks like Tesla. I made a video about my thoughts on Tesla and why I personally wouldn't be buying it at these levels. And I still get comments like, oh, you're so wrong about that. And not that they don't bother me. I could really care less if that's the type of mindset you have. But the point I am trying to get across is that I'm seeing very similar trends I got the exact same types of comments, the trends that I'm seeing out in being here on YouTube. You see a lot of things like through the comments and what gets popular and whatnot. I'm seeing actually a lot of similarities, almost like a repeat of itself. And for those of you that know, like marijuana stocks, I got so much hate when I said don't buy them when they were all the talk, and there was big investments going everywhere and the stocks were going up like crazy. But then months later, people were coming back and thanking me saying, wow, I should have listened, or I wish I saw this earlier. Again, the same thing happened with Bitcoin, but that was an obvious one. But at this point right now, I think that the stock market, especially you're noticing it in companies like Tesla and the electric vehicles and whatnot, they're so unconnected in the way that they traditionally should be to the fundamentals of a company. And more or less, these stocks are, I use the word hype, but I don't think that actually explains it enough. I think these companies are just really trading on pure speculation, in the sense that, like with social media and with all this advancements in technology and all these retail investors, the masses, let's call it, people like us, the viewers, the subscribers on the channel, the fact that there's so much information available and so much news that we can get and all these free trading platforms where everybody's coming in, and I think that these stocks are more or less really moving off of just pure noise. A company releases good news, a promising article, or the CEO comes out and makes a tweet, this or that, and the shares jump 5, 10, 15%. That's not historically how stocks should move, right? If you understand how a stock price, like what that really is representing, in the sense that it's the value of a business. Let me try to explain this very briefly before I talk about Tesla. By the way, if you didn't hear, Michael Burry, one of the big famous investors, most famous for the Big Short movie, or for his guess or his shorting of the real estate market or the real estate bubble back in 2008, he actually just publicly announced that he is shorting Tesla. And in fact, I saw a piece on New Money's channel, which I'll have to give a shout out for them because I'll just take the clip exactly from there. But it was Elon's email that got leaked to the employees. And I'm actually going to go search that up right now because I want you guys to hear about this. At a time like this, when our stock is reaching new heights, it may seem as though spending carefully is not as important. This is definitely not true. When looking at our actual profitability, it is very low, around 1% for the past year. This is from Elon Musk to the employees. Investors are giving us a lot of credit for future profitability, but if at any point they conclude that's not going to happen, our stock will immediately get crushed like a souffle under a sledgehammer. Much more importantly, in order to make our cars more affordable, get the spending. This is a tough game. Okay, that stuff's not so important. That was an email sent from Elon Musk to the employees, basically saying, if I were to paraphrase that, look, guys, our share prices be out of control, and I think he very well knows it, to the point where it is so overpriced. I've talked about this many times, and I don't see how people can't see this. Like when you see a chart like Tesla, again, first thing that draws to mind is this is exactly what Aurora Cannabis looked like. This is exactly what Canopy Growth looked like, and Bitcoin at the time. It's just the classic signs of a bubble. And to have the CEO of your own company just say, hold up, guys, let's not get ahead of ourselves here. This is just like, he's basically just bringing it back to reality, saying we're not profitable. And if you compare it amongst all the other automobile companies out there, there's no real metrics that justify Tesla trading at where it is. I believe the stock, I saw an article saying it's bigger than Berkshire Hathaway, or it's at least up there with Berkshire Hathaway, a multi-billion-dollar business. Tesla, as he mentioned, is operating at a very, very slim profit margin. So, or profitability, I should say. So what am I getting at here? Again, this is a messy video, but I'm just trying to compile all my thoughts as we go along. To me, the combination of this, the electric vehicle stocks all shooting up with just news and hype and speculation and no real connection to the fundamentals of a business, and then the stock market just bouncing back up, like literally dropping for a little while and just picking back up. I think these are all actually very, 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 very dangerous signs to investors as a whole. And I think that the stock market is going to find a way to show people that it's truly the boss and that making money is not this easy and that a lot of people are going to end up getting burned. I truly, truly believe that. I truly believe that the stock market always finds a way of just crushing people right when they start feeling really confident. And at this point, I think that's the case with stocks like Tesla. And again, the NEOs and whatever the case is. It's not to say that these companies aren't doing great things. Again, I'm such a supporter of Tesla. I love Tesla. I very much want to get a Tesla, and at some point in the future, I very much will. But that doesn't mean we can just buy a stock at any given price. I said the exact same things in my marijuana videos. If you want to go watch those exact videos, when I remember specifically Canopy Growth was trading significantly, like I think its value was valued at more than Under Armour, a company that was selling billions of dollars worth of products, and they weren't even making money yet, or very slim amount. Like, it just didn't add up. And of course, it didn't crash right away. There's still months, and there's sometimes the market takes years to resolve this stuff, but you're not properly investing if you're investing in these companies right now, because it's just speculation and it's just hype. Now, to finish off this third part of this video, and sorry guys, I'm gonna take a sip of water because I want to share with you guys something exciting that I thought about as I was literally driving here to film this video. I want to coin something right here, right now, and we can mark this video because I'm pretty sure I'll be the first person to say this. In the world, there's all sorts of smart people, philosophers, economists that coin these different theories. Keynesian theory, you have the random walk theory, stuff that we live and die by today. Like, it's just set in stone. We know these things. Well, I'm going to start a theory right here, right now. I'm going to coin it, and I'm going to call it the YouTube hype stock theory. We can probably think of a better name than that. But overall, the basis behind this theory is that if you see certain stocks on YouTube blowing up with popularity, the basis behind this theory is that those are not companies that you want to invest in. And there's a little bit of psychology behind why I say this. It really boils down to how our brains work and how the human species functions. In fact, I'm reading a book as we speak, which is just constantly reminding me of why this is the case. But just on a base level, if we were to break down how YouTube works and how fundamentally flawed and skewed the system is, YouTube rewards, I'm just going to break down how YouTube works. The algorithm in YouTube rewards eyes, and it rewards the masses. It rewards people, just average people going in and following and kind of converging on certain topics, whatever that topic is. Now, if you're seeing videos pop up on YouTube for Neo stock, for Nikola stock, for whatever the company is, and they're generating more and more views, well, the algorithm likes that. They're going to promote to more people, which means more average people, more of the masses. Like, I don't want to call them stupid people. They're not stupid people. We're all just people. I could be dead wrong on this. But if all of the masses are being kind of shuffled towards certain videos, those are the ones that you want to stick away from, because the reality is, this again boils down to psychology. Humans are so flawed in many ways, in the sense that our brain, part of our brain, a portion of our brain, certain aspects, they fall victim to our intuition, they fall victim to emotions, they fall victim to greed, biases. There's so many things that influence the decisions we make. And if you understand that YouTube is basically a system that exploits that and promotes that, and it's just a a wheel that just amplifies up the things that you shouldn't be looking at. It should be a pretty clear theory that if you're seeing something blow up on YouTube, like such an EV stock or marijuana stocks, because if you remember, if you've been on YouTube, I've been on YouTube for now 2.5 years. And in my 2.5 years, I've seen two major cycles of this. I saw the Bitcoin, which is when I first started, and people who had no idea what they're talking about were talking about Bitcoin. I saw it with marijuana stocks, where channels that you watch today, they probably deleted their videos, but they were the ones talking about marijuana stocks too before they crashed, and then they died out. We've hopefully, if you've been following us for a while, we've stayed very consistent. But now those same people are coming back with the EV stocks because, again, it's a human tendency. It's a human bias to get sucked into these things. And that's just the reality of it. I do too. Like everybody does. It's not to say that they're, like doing the wrong things or bad things. It's just that I saw a post once that if somebody posted like a video on stock market basics or stock market, how to invest, it gets, such a small amount of views. But someone posts a video on some random topic, YouTube promotes that. I'll post that thing up on the screen today. But that's more or less the basis that I'm talking about in this video. So if you're watching, to boil this all together, because I got 5% left battery on my camera here. If you're watching this video, I would just suggest to be very careful with your investments and don't get overconfident, especially at a time like now, because it's times like now where the market is shaky, in the sense that our economy is shaky, the market's powering through, but it's at these peaks, it's at these tops of cycles that people really tend to be, first of all, at the most risk, and they tend to make a lot of irrational, overconfident decisions. And again, as I said time and time again, I think we've been in a bull run for over 10 years. It only takes a matter of weeks or days for things to crash down. Take Elon Musk, for example. Let's assume you made all your money in Tesla, which I know some people have. And there's no disrespect to anybody that has. But if you have your whole portfolio in Tesla and you've just 10x'd your money over the past year, like Elon said, it could get crushed like a souffle with a sledgehammer very, very fast when these bubbles pop. It devastated people with marijuana stocks. It devastated people with Bitcoin. And something about my intuition, my gut tells me this is what's happening with electric vehicles. And the tipping point, again, for me, being as a YouTuber, is I see these trends in the comments, in the types of videos that get posted and shown. It's the algorithm, it's the system that's tipping us off. So be very careful with that. Again, let me be very clear that this has nothing against electric vehicles. This has nothing against Elon Musk or whatever the stock is that we're talking about. But it's at the point where all fundamentals have been thrown out the door and it's just news and speculation that's driving these stocks. And that's not how you want to invest. I do see strong hope for this industry, the same way that I saw strong hope for marijuana stocks when more and more states were getting legalized. And here in Canada, we had the legalization bill. Of course, I see that. I do still see the potential with Bitcoin and blockchain, but that doesn't mean we can invest at any given level at any given point. And I think it's important to just be aware of that, just be on top of that. But yeah, that's our crazy video for today. I don't know why I'm so out of breath for this video, but battery is 2% on the camera, so I'll wrap it up here. If you guys enjoyed, give a thumbs up. Leave your thoughts down below. If you guys don't agree with me, that's completely fine. I'm literally just sharing with you my thoughts. Keep investing as is. That's, to me, the best way to go about it, especially unless you're retired, then you have to be very, very careful. But if you have time on your side, just have a good portfolio that's balanced. Don't get sucked in too much to these trends. You can play with them here and there, but just don't think that by investing at you're investing at peaks is really the way I look at it. Just stay rational, keep doing what you're doing, and hopefully this video was able to give you some good, valuable insights. Thank you guys for watching. Hope you guys enjoyed.